Welcome to the Dividend Talk podcast, episode 74, Dividend News of the Week. Hey everyone, welcome back to another episode of Dividend Talk. In today's episode, we're going to talk a little bit about Ahold, Royal Dutch Shell, or Shell as they may now be known, Cisco, Alibaba, and Novo Nordisk. All this and more. See you on the inside. Yo. What's going on, European DJI?
Yo, EMF. I'm a bit slow in thinking today. Spent too much time in the bar yesterday, too many vodkas. So I'm in Poland. It's how we sometimes enjoy the evenings, but it was a tough night. So yeah, it's good that we have a podcast today. I can tell you that. How are you doing?
What better hangover cure than talking about dividends?
Oh yeah, because it will give me freedom. Imagine what you can do with all your free time if you don't know what to do.
Maybe drink more vodka.
Yeah. Well, that's not. Maybe we have like teenagers here and there that are listening, so maybe we should don't do this at home. Anyway,
Yeah, put your money in dividends until you're maybe our age and then drink
yes.
vodka.
Yeah, Diago has a really nice one. If you want to have a little bit less predictable dividends, you can also buy Heineken shares, but those are much more better for your future wealth than actually spending the money on their products.
Solid advice to open the show.
Good. I So much happened this week, right? I mean, I woke up on Monday and suddenly like I took my coffee, I tried to not use my phone the first hour, and then I opened up Twitter and I saw it already. Ahold, Shell, I mean, big news, two Dutch companies,
Yeah.
iconic Dutch companies with great news. So maybe we should start with Ahold. So, have you seen the news around that?
Yes, I have seen that they are spinning off.
Yes, bol.com. So
Mm.
this is like the Dutch equivalent of Amazon. This is what, if you ask the Kleine Capitalist, who was also once on the show here, I've been talking with him just during the year about this stuff, and we always feel like this is one of the crown jewels, like hidden, like unlocked value that international investors don't understand. But now also Elliott Management came in as a, how is it, hedge fund investor.
Yeah.
They took a 3% stake. They were also asking for bol.com to be spun off. I think it's really nice that they are going to do this. I'm really excited about this. Not sure if I will keep those shares when I get them, depending on how the share price maybe is valued at that time. But it's just Ahold, right? Also, again, a 1 billion share buyback on top of that. This company just, I mean, people know that are following me that I bought quite a lot in the beginning of the year, around 22 euro. I was making a strong case for it at the time. It has now surpassed 30 euro in share price, which is a pity because that means like it becomes expensive to buy, how is it, to reinvest the dividends.
Yeah.
But I mean, this company keeps performing, right? This typical UPOT, under promise over deliver, and I'm quite excited about this, and also high single digit growth they expect for EPS going forward until 2025. Um, I mean, this company is just doing everything right at the moment, I think.
Yeah, and I think you forgot to mention that Ahold will keep a significant long-term control. They'll have a significant stake in
Yeah.
the new spin-off. So I know you mentioned you might not keep the shares. I don't know why you probably wouldn't. I think Ball or Bool.com is probably one of their. I mean, they're spinning off for a reason. They want to let it
Yeah.
grow.
Yeah.
So I personally won't be selling it. I think that's
Yeah.
probably one of the most exciting parts of the business. So I think I'd like to keep that. But
So for me, not because the rest is for me more exciting because of the dividend and the cash flow behind it. So when I think about bol.com, that will be a growth stock, and then the
mm,
question is, do I want a growth stock in my portfolio if I have already others? So that's more my considerations, and I like the brand. Doesn't have a too strong moat when I compare it to Amazon, but it has a first mover advantage. So it's really hard to outcompete Bol currently in the Dutch market.
Yeah.
So it depends on the deep pockets of Amazon and how aggressive they will be with building up in the Netherlands. But it will be a growth stock. So I don't know yet. I've not made my verdict, but usually I sell a little bit of these kind of spin-offs. So let's see.
Yeah, look, we still have to wait for the finer details, but it's look, it probably makes sense from Aho's point of view, and there's no surprising that these hedge
Yeah.
funds are coming in and trying to spin off these companies. But I don't know, interesting start to the week, and as you said, a second. I don't know, is it a Dutch company now? I don't know if it is. I think
It is
it's
still until the general meeting and before they vote.
we might have to call it Royal English Shell. I don't know.
No, so they announced that the name will be Just Shell without the just in front of it. So that's what it will be. But yeah, so for the listeners, what Shell currently has, it is like a dual listing. So often you get the question like, should I buy the RDSA or the RDSB shares? This is complex for the company. It comes with overhead costs. So they have quite an expensive capital market structure. They want to simplify this. This is what the real news is, but I can't see it separated from Unilever. So if you follow Dutch news and Dutch politics, the ruling party, I think a few years ago, was proposing to remove the dividend tax, I believe, for such companies that they need to pay to make it more attractive. The coalition didn't agree, if I remember correctly. Then Unilever said, you know what, it's probably better for us to be in England because it's more favorable tax environment. And this is what Shell is also doing now. So it will move its tax location to the UK. With that, needs to remove the royal part because I think companies in the Netherlands can have that when they exist 100 years, and of course are Dutch companies. But with this, they need to remove this royal status, and that's why they are changing the name to Shell. But I think it's not just the dual share listing. I think it's even more, how you say it? They will just keep more money in the pocket that they can use for buybacks and everything. And they even talk about this. They just don't talk net about the dividend tax and such. But if you see all the arguments, it's really around this in the end.
Yeah, look, it makes sense. It's interesting to go to the UK when everybody else is trying to get out of the UK after they left
With the
Europe. But
Brexit, right?
yeah. I mean, it's quite interesting from that perspective. But it completely makes sense to stop this dual listing. The From a shareholder point of view, I don't think it will affect any of us whatsoever. They're still going to be
Yeah.
listed on the Amsterdam, New York, London exchanges, so I don't think we'll see any impact from our end. But as you said, it'll streamline their own shares, it simplifies it,
Yeah.
the structure, and hopefully return more money. I mean, what did they promise in return? 7 billion to shareholders.
Yeah, because they sold the Permian base
Yeah,
assets, so they will buy back shares early next year. But I think we will get some questions about around that time from listeners, like should I buy my Shell shares now in the UK and sell the ones from the Netherlands, because that's what many people have been doing around Unilever as well. Also, if you have, let's say, a favorable tax, like in Poland, you can buy shares in something like a ROF or
yeah, like
kind of type of pension thing.
yeah,
So if you then buy the shares in the UK, what many people already do, you don't pay tax because you don't pay dividend tax in such a tax advantaged account. So it will just make the choices much more easier for such kind of investors. I will keep my shares on the Dutch stock exchange. I don't see a reason of selling those off. It will be I will be curious to see, like, will it now be the UK because they are reporting dividends in the US dollars, right? So I will be curious to see if they do something with that as well, whether they go to pounds going forward or something like that. Yeah, so
I
it's to be
I'd
seen.
im- I'd imagine they will do both. They still have the ADR in
No, but dividends are paid. Shell pays dividends in dollars. So even if you have the euro or the pound shares, they still declare the dividends in dollars and they pay it like that. So it's so awkward. That's why when you have G sheets and everything, you always need to pay attention to Royal Dutch Shell because it pays dividends in different currency.
Interesting. I hope they stick to dollars or euro. I don't want another currency.
Exactly, pounds enough. So, but for me, this is also historical, like Unilever. This is a company that cut their dividends like last year for the first time in 74 years. Always had these dual listings. It's really historical, such a dual listing because of the mergers at the time. So this is really big news, right?
Yeah.
From that point of view. So it's not. I think it has not been a light decision taken by the CEO.
And how do you feel as a Dutch investor? I mean, all Dutch investors that I speak to are very proud about all their national companies. So how do you actually
Yeah,
feel about this?
I feel quite agnostic to it. I must say. Um, I think more as an investor than I said a Dutch citizen here. So if it helps the company, if I get more yield on it, fine, let's do it.
Love it.
So
Money before country.
for me, yes, that's true. Good. Another deal, because these are the typical companies we often see in the news. But what was really unnoticed also on social media, Novo Nordisk is to acquire Dicerna Pharmaceuticals. And this is really interesting because they bought it for the technology behind it. It's called, they have an RNAi platform.
Okay.
And this technology, and I mean, it's really hard to talk for me about it from a scientific point of view. So if we have really people in the pharma industry in here that can explain it in simple English, then please reach out. But what I always understood from it is that it suppresses, for instance, the proteins in your body, and with that, it can, I said, create better. I said avoid certain reactions, and actually, therefore, it can help mitigate, for instance, in the diabetes and such. Yeah, so it suppresses things. I say it snoozes, like you have an alarm. This technology glues to it and allows it kind of to snooze all this kind of stuff, so that doesn't become really an issue.
A
In
snooze
simple
button for
English, yeah,
diabetes. Yeah. Oh,
yeah,
cool.
something like, well, that's what the technology has in its potential, right
Okay.
here. And I know they already are looking at a clinical program, a clinical trial next year in 2022. So they had already a partnering agreement, but they are going to buy it now for 3.3 billion. So it's really for the technology behind it. It will be an all cash offer and it will be funded by debt. And I think this is really smart. Debt is at like all time lows, right? From that point of view.
Yeah. Yeah.
So they can easily pay for this. The profit guidance, therefore, also remains, and the buyback program as well. So it's quite a big acquisition, 3.3 billion, I would say, and really interesting because this kind of technology, if it really lives up to the promise, I think it could be again one of those brilliant acquisitions that Novo Nordisk does. So
Yeah.
I found it really interesting to read this in the news.
Cool. I look. I can't give too much of an opinion. I don't really know anything about that type of technology or the company they're taking over, but it sounds exciting. I have a couple of friends, and their daughter is quite young and just been
Hmm.
diagnosed with diabetes. So I'm always tuned into new technologies or anything coming up because knowing it's
Yeah,
close to you, you pay attention. So stuff like this is great to
yeah.
see, and I hope it's successful, not just for the share price to explode, but to actually help people.
Yeah. So I don't own Novo Nordisk. I wanted to buy it at 400. I think Nordish crowns. What is it? Danish crowns.
Yeah,
Danish crowns. But
yeah,
this is always where I'm a bit penny wise, pound foolish. So it flew away from me. It is like it is. Yeah.
cool. So another interesting topic that came up was our famous Dutch broker. We're sticking with
It's German broker now.
oh,
Flatex degiro.
it's hey, the Dutch are losing everything, aren't they? They're losing companies and brokers. It's a bad
Well,
year for you
they
guys.
they they won with football from Norway this week, so they're qualified for Qatar. So
Hey, don't rub that in, please.
yeah, no, but It was been taken over. So Saxo Bank took over Bink. It's horrible. I
Yes,
had Bink
yes,
before, so I
yeah.
want to get rid of Saxo. So I need to send them an email. I understood that they will allow you to transfer your portfolio to another broker without getting the costs associated to it.
Okay.
So I'm really going to try that because I'm not happy with the how you say it, the user interface and everything. It's just horrible. Saxo is really a horrible platform for me. I want to get rid of it, but I don't think we have the pure Saxo platform. I think they have it after the Bing migration, so we might see it a bit different.
Yeah.
But yeah, the Hero is introducing zero commissions, and I was wondering, like, how do you feel about this? Because Interactive Brokers did something similar, right? At least they did a flat low fee.
Yeah, I mean, it's clearly an attempt to probably quell. I would imagine from speaking to our community, a lot of people that were never in with interactive brokers decided to test the water and start to gradually move over there. I would imagine that was probably a widespread thing that happened within Europe. So I think the Gyro has come out to do this to try and stop that from happening. I was look on the face of it, you get this email, and straight away it says the Giro goes zero, right? And you read it and it's like zero commission, brilliant, love it, right? Makes sense. Now look, they're cheap anyway, so no, it's not as if it was a big huge deal. I mean, try buy from Davy stockholders, which is an Irish stockholder, and you're paying like €25 per transaction, no matter what size it is. So paying 50 cents is nothing. But these guys are giving you commission free trading, and then you read on, and it tells you then that there is a fixed 50 cent per trade for external handling costs, which is basically what we're paying anyway. So
Yes,
there's
yes,
there's not too much of a difference. There's a small difference, such things as option trading, which we know that I do a small bit of. That used to be €2 per contract. It's now 75 cent. That's a significant saving over a year. But I mean, it's a cheap exchange as it is. It didn't have to go much cheaper for me to be honest with you. I prefer that they just open their offerings a little bit more rather than save on fees. But
yeah. But there's a price war going on because if I'm correct, and I haven't really tested it out yet, Interactive Brokers in Central Europe is also offering fractional share trading at the moment.
yes, I've got a couple of emails. I haven't tried it myself, but
Yeah.
they have sent a couple of emails on that.
So what I'm observing now is that we're entering a market conditions for brokers, what we have seen in America with Robinhood and everything, because we have trading 2-on-2 with pie investing,
Yeah,
fractional share invest, and they also do fractional shares now. Interactive Brokers with fractional shares, the Hero with zero commissions
yeah.
in their thing. So it is really a price war at the moment between these brokers, I think. And I'm also wondering if we will see further consolidation because Flatex bought the Hero, Saxo bought Pink. So this is also happening. So I
Yeah.
think it's really good for us as investors in the end that we are finally getting these options towards us.
Yes, but there's always a downside, and I hope it's not the quality or the customer service of these that suffer. I mean,
Yeah, true.
fees have to pay for something, and
Yeah,
if you take
true.
out fees, you reduce fees, something has to suffer along with that. So always just weigh up your options.
Yeah,
But
true.
personally, this doesn't affect what I'm doing. I still have my interactive brokers account. I still have my degiro account, and I'll use both simultaneously. I mean,
Yeah,
they're both cheap. I prefer interactive brokers. They have a lot more to offer, but the interface and the reporting, and do you know what I really like about about degiro, right? And this might sound stupid, but I go onto my app, and at the bottom of the screen, I can go to portfolio, scroll down to the end, and it tells me all the upcoming dividends.
exactly.
Yeah, man, I can't do it that easy on
Yeah, and in
interactive.
interactive brokers, I need to log in half an hour before to find all the buttons and the reports and the trades and the orders. It's killing me, you know?
So yeah, I set up a monthly. I set up this template, this report template, just for
Yeah.
dividends to show me what what I have received the previous month. But I want to see clearly what's coming up next month. I want to know what's coming up.
Yeah,
So
I wonder for who interactive brokers is designed. You know, they have really poor UX. So maybe it was not for dividend investors, but for traders or professional investors in the
Yeah,
past.
yeah, 100%, definitely,
Yeah,
definitely. Like
and they are probably not interested in dividends.
if well, if they're listening to dividend talk, they better start getting interested in dividends.
Yeah, exactly, definitely. But the hero for me, therefore, from what you said, is like really well designed.
Yeah,
It's
yeah,
just entry level design, actually, really simple. And trading 2-on-2 has the same.
yeah,
But with that, you're usually also a bit limited in options. And I think for me as an investor who purchases one or twice a week something, a month something, it's more than enough for me. I have shares at interactive brokers for the same reason as you, but it's actually a barrier for me to even use it sometimes. That if I
yeah,
need to choose between the two, I feel like, oh, the hero is much simpler on the mobile. Tac tac, done.
yeah, yeah. Do you know what? If the hero will offer option trading on US stocks, I would have had no reason to go to interactive brokers. That's
Yeah,
the
yeah, yeah,
that's the only thing I'm missing really from them.
yeah, yeah. True, true. Good. So usually we don't talk about brokers, but we both know that we get a lot of questions about brokers. So maybe we should talk a little bit more about these brokers sometime, because I think everyone experiences this, right? Sometimes these issues with it, sometimes the new news that comes in, and
Yeah,
so. But good job from the hero that they are also starting to compete.
yeah, exactly.
I believe also then maybe more on the company news, like from earnings. I think Cisco also had something to share again. What happened there?
Yeah, Cisco dropped. Okay, and look, I don't get I don't get the market sometimes. Now, honestly, I've sold Cisco there a while ago at the start of the year. I think
Mhm.
they've hit the peak
Yeah,
and they were overvalued. I value them around 43, maybe closer to $40. But clearly people value them higher because they've been drove up to 50, $57. I think the average analyst consensus is about 62, $63. Okay. So people have a different opinion to me. Now, what I don't understand is, right, if you look at their summary for this quarter, their revenue was up. Okay. It was up 12.9 billion. So it's up 8% year over year. Their gap earnings was up, which is probably the first time in 5 or 6 quarters. The non-GAAP earnings is always up because they fudge the numbers, but that was up as it is. Um, there was the business year over year total product growth of 33%. I mean, this is the biggest backlog the company has ever had. Okay, so numbers look good. I wrote quite a bearish article back in February, I think, maybe quarter 2 earnings, saying that they had 5 straight quarters of revenue decline, earnings was declining. Now we've seen 2 quarters of growth. They're starting to grow, and they drop. I think they dropped at 11% last time, and now they dropped 5 or 6% this time, all because they lowered their guidance. I mean, I just I don't get it, and it's not as if they're lowering it to minus figures. They lower to about 8%, 7 8
yeah,
percent growth year over year. I just don't understand why it's dropped. If you were bullish on Cisco before this earnings, it's probably a good time to buy them. If you think their fair price is 60, 70, $62, like the analyst, now is definitely a good time to buy them. Personally, I still think they're a $40 company for me. I'm still not 100% sure on the catalyst, but you got to remember, we talked about these supply chain issues. We talked about
yeah,
semiconductor issues. I mean, anyone with half a brain would know that these types of companies, they use all these components. They're going to be heavily reliant on them. They're going to have issues with this. It's going to lower it. And I think that's the reason they gave the lower guidance, because of supply chain
yeah,
issues and stuff. So this has to
yeah.
be for, like, these analysts are giving estimates, but they're not forecasting these issues into it. And then the stock price gets hammered straight after it. So,
Don't let me get started about analysts. I mean, I'm I
but
get this question sometimes as well about analysts, right? About this, and I have a feeling that probably most of the analysts are just juniors that come from university and work in a bank, and they are then asked to give an opinion. They probably, I don't know, even know what they do. There are some analysts that are brilliant, right?
mm,
But then I wonder always, why are you not an analyst and why are you not a how you say it, a fund manager? Because if these guys are so smart, like the guy that really was right on everything with General Electric, right?
yeah.
This guy should not work for a bank. This guy should be its own fund manager and just get a lot of money from wealthy people because that's where they deserve to be, right? So I ignore analyst
The,
targets unless it's one that I really know is good.
their targets, their estimates, and that's all they are is
Yeah,
estimates. And that's what
yeah,
I think investors fail to understand. And we get these huge drop offs for no reason. So
yeah,
nothing fundamentally has changed about this company. As I
yeah,
said, they've had the biggest backlog of orders they've ever had in their history. I think cloud growth actually grew a couple of 100% as well, which shows they might be
hmm,
clawing a little bit of market share from the big boys. Not enough, obviously, to be anyway
yeah,
substantial, but they're still clawing the way in. So my take on this is if you are fundamentally bullish on Cisco before these earnings, there's nothing in there for me that would change that
yeah,
opinion, and you should
yeah,
buy them. But personally, as I said, they are still quite heavy in price for me.
yeah. Well, that's maybe a really nice one to talk a little bit about Alibaba, one of the stocks which isn't a dividend stock. But it's probably good for me to talk a little bit about it because I made a video on YouTube. I
Yeah,
had it once as a stock pick. It dropped now to $140. Full disclosure, I still own all my shares. I didn't sell anything. I have a purchase order outstanding to buy a few shares again at 144. And didn't get triggered today yet, so hopefully on Monday. So I'm buying a little bit more, not a lot. But they had horrible earnings, I must say. Yeah, if you think about it, they had revenue growth and everything, but it was not anymore the huge numbers like the years before. It was now 16%. To be fair, in my own YouTube video, I and my free cash flow analysis, I already took like a more conservative approach, like I usually do.
yeah,
But also the earnings were really, really just poor. Yeah, they were just bad. So it was definitely not a good quarter. It even felt something like a kitchen sink quarter. Yeah, because a company cannot fall apart just like that. I believe they also had some write-offs on the balance sheet and such, which are usually not good signs, right? You don't want to see that specifically, with a company like Alibaba.
yeah.
Um, but the earnings were just not good. I still think if you think about long term, it's really well priced, and that's why I want to buy some more too. Because after this next purchase, I would have it as a full position because I still have a small gap. But these quarters happen sometimes to more companies, maybe not to these kinds of growth companies. We haven't seen this from Microsoft or something like that. But Amazon this year, remember, also like really 10% down or something like that.
Yeah.
So Alibaba is in the same trend, but it stays like I said, risk reward wise, very attractive for me personally.
I mean, I'm laughing because you say it's a poor quarter, and the revenue. Look, they have 29%, but it's 16% excluding Sun Art. But 16% is still quite good for some companies. It's not bad.
Yes, but I have modeled also with double-digit numbers, right,
Yeah,
to justify a share price. But with that, my fair value estimate was on $250. So I will run the numbers this weekend. Maybe it becomes then $220. But for me, that is still undervalued at the moment, if you know what I mean.
yeah, yeah. Still, look, still plenty of value there. I would imagine. I don't think I'll buy any more unless it drops to 100. I'm surprised you didn't get triggered today because I was looking on Interactive Brokers and it was at 139.
On the Giro, the minimum price was 140.00, but
Wow.
it didn't trigger. Probably the stack was not big enough. I saw on another broker it was 140.10, and maybe this is all those dark pools or something like that
Yeah.
that we know of that have an influence on this. So Monday is another day. Let's see. Generally, the stock market was quite a lot down. Oil was 3.5% down. People scared, of course. Australia going on lockdown. But this is the stuff we don't need to talk about on dividend talk because it's just noise on the short term, and it usually gives us buying opportunities.
Yeah, exactly. And going back to the analyst, I know I had a little rant, but maybe maybe we want the analysts to overestimate on all our stocks,
Oh yes,
and
yes.
then our companies get penalized, and we can buy them. And you've said it before: know what you own. And I think it's
Yeah,
quite key there. Forget about these analysts. If you know what you own, there's lots of different buying opportunities out there.
exactly, exactly. Okay, hey, this is lots of news we wanted to share, and I think really good stuff actually going with Ahold, Royal Dutch Shell, Novo Nordisk, the Hero as well for us. So I think it's actually quite an optimistic show here, and but it's also probably good time to go to our portfolio review of the week. And I mean, I hope that this is not a real name, but the person called Spunky Bong. He's from Canada as a passive investor based in Quebec. So maybe it's Quebec. Maybe the name is real then. And he is investing purely for the dividend. And I think this is good to mention. Long time listener. So thanks, Spunky Bong. We really appreciate that. And he want to hear our view on the portfolio. So maybe it's good to mention what he has on the American Stock Exchange. The first company probably to call out with ticker CRF is called Cornerstone Total Return Fund. It yields 14.5%. The second ticker in the list is CLM, Cornerstone Strategic Value Fund. It also yields 14.6%. Then ticker symbol MO Altria with 8.3%. Some Apple, some Pfizer, PFE ticker 3%. PayPal and SBSW, Sylvain Stillwater Limited Gold Mining Company, yielding 12.4%, and some Lockheed Martin. Okay, I will now really go quickly because he has also quite some portfolio on Toronto Stock Exchange, probably 12, 13 stocks. But I just want to call out a few. First of all, none of the stocks that I quickly looked up is yielding lower than 4.8%. The highest one is with ticker symbol FFN on the Toronto Stock Exchange. It's North American Financial 15 split, 18%. There's another one, DFN, with 14.7%. Yeah, I was just wondering, what are your thoughts about this portfolio?
Man, I mean, Spunky has said that he's investing purely for the dividend, and that is quite clear. They are some high, high yields. Honestly, I don't know enough about the companies, the Canadian companies, and some of these tickers. They are mutual funds, so I don't know enough about them. But the yields certainly are juicy. I honestly have a little bit of FOMO. You're looking at these high yields. What I did do quite quickly while you were talking about them, I was throwing the tickers into Yahoo Finance and just checking the chart. And what all these high yields have in common is that they dropped pretty damn hard when there was during that pandemic. Now I know all companies did, but some of these were close to like zero, close to zero. So you want to have pretty big kahunas on you to hold these companies in bad times. We have no clear view of when Mr. Bong bought these companies. I mean, if he bought them during the pandemic, he has made an absolute fortune
Oh, he's
on
made a fortune.
yeah
Yeah,
on the share price, and then you have this high yield to boot with it. So I
yeah.
mean, investing for the dividend, he is spot on with his goals. I don't know how comfortable I would be. I mean, there's no harm. He has a nice mix. He has some Apple in there. He's got some Pfizer. He's got some Enbridge in there, which are companies we know. Aliquin Power is another one
Mhm.
that's quite good. So there is a healthy mix there. He has got high yields. He has got some lower high yields. It's 3 to 4%. He's got some Altria, so there's a good mix. LMT as well, Lockheed Martin. I really like his mix. He has really high yields and low yields, and it matches his goal perfectly. As I said, I don't know if I'd have the stomach for when it drops.
Yeah, I wouldn't sleep well at night with this
Yeah.
portfolio, but I must say I'm a dividend growth investor, right?
Yes.
Purely depending. And if he's not investing for dividend growth, but purely for dividend, he definitely has a high current yield, which is giving him lots of cash. But in a crisis, I would feel not comfortable with those high yielders. No, really wouldn't feel comfortable.
But you look, we're in a bull market for say 10 years. Okay, so if you
Yeah,
look at FFN, for example, North
yeah.
American Financial, 18%. Within 6 years, you have your full capital back. You're risk free nearly there.
Uh, yes, yes,
Yeah,
but I, but That's nice saying. But if you think about it differently, if in 5 years from now you want to live of this money and this is your income, and you take it with a 10-15% margin of safety, your
Yeah,
dividend income, and then knowing these high yielders that might make up, let's say, like that, if they start going down, you might easily maybe lose 10-15% of your total portfolio. If this would be in dividend income, if this would be an equally weighted portfolio. Yeah, and that's what I mean with sleep well at night. I wouldn't feel comfortable. I would feel more comfortable with some lower yielder. But this is again assuming that they have probably payout ratios above the cash flow they are generating. Because if they are telling me that this NFN is making also return on investment on their investments of more than 18% per year, and then an 18% yield, then it's still risky, right? One on one here. So it usually these companies are eating away from their assets. So Spunky, I would love to hear more about those companies. Maybe if you could share a little bit there.
yeah, yeah,
But that
definitely.
would be my worry. That yes, you get your money back, but you still have your money in this asset. The question is where you allocate that money then over time. What you do with the capital allocation. And but if it's eating away the underlying assets, you're actually also increasing the risk of your portfolio, at least the capital part of your portfolio.
Yeah, I mean, we've been doing this maybe 8 or 9 weeks now, and this is unique. We haven't seen a
We
portfolio
haven't
like
seen this
this.
portfolio yet. Yeah.
And this is what actually love about this segment is that honestly, I thought I thought dividend growth investors would all have a similar portfolio, but that has been not the case.
Yeah.
It's actually mind blowing to see how many different types of portfolios there is out there. And this is, I mean, this, as I said, honestly, I have a little bit of FOMO looking at these yields, but
Yeah.
I just would not be comfortable with it.
So for me, it feels like I'm owning Omega Healthcare investors with
Yeah,
a 8 or 9% yield, knowing that there's all the time this political risk on the healthcare. So I take it as a little bit of more the riskier dividends in my portfolio. But here's like 5 or 6 of those. Yeah, so
yeah,
that's what I mean.
yeah.
So if I think about my mental state around Omega Healthcare, I feel fine. But if I would have like 5, 6 in my portfolio, I would have a total different conversation around this, and that's what I see here. So and maybe Spunky's just laughing in the all of the end. He's like fuck you, motherfuckers! I'm getting cash like, I'm a cash generating cash flow machine here, and you lose us with your low yielders. Yeah. So yeah.
Look, I always say write down your goal, write down your risk tolerance. And he's wrote down his goal purely for the dividend, and he's spot on with that.
Yeah, that's I give him all the credits there.
Yeah,
That's purely for the dividends in some of those. Yeah,
yeah,
yeah.
yeah. Good stuff.
Spunky, this is not a roast or something like that. You hear here the little bit the more conservative nature in our investment philosophy. If this fits you well, you're really getting a nice high yield. So kudos. If you get now a little bit nervous because of whatever reason, based on a conversation, my recommendation would be consider a little bit more lower yield, but more growth over the long term in potential. But then again, I don't know these many of these tickers that you have whether they don't have growth potential. So ask yourself this question first, and ask yourself this question whether you want growth or need growth.
Cool. We'll move on to some listener questions. I think we have quite a few. We forgot about Phil last week, so I've moved him to top of the list once again for us. And he has asked us if you wanted to participate in the hydrogen boom bubble, would it be an equipment manufacturer or a producer?
Equipment manufacturer, because I believe that they usually don't manufacture only for the same industry. And I find the hydrogen still like not an established one in that sense. So I would probably more go for the equipments.
Yeah, probably be the same. You'll probably have more chance of success with a manufacturer, as you said. They're maybe not just in one niche. Producer maybe more chance for total returns if you pick the right one, but
Yeah.
that's like
Yeah,
throwing
yeah,
a dart
exactly.
in the blind.
Okay. The next question is from Life with Dividends, and he's asking our thoughts on Amazon UK's move to stop accepting Visa credit cards for payments, causing a slump in their stock price. Is this a buying opportunity with Visa?
Yeah, I mean it's just credit cards. It's not the debit cards, and I would imagine most people, most sensible people in the UK and Ireland would be buying with Visa debit cards. Like I have a Visa
Mhm.
debit card. I believe they've stopped Visa credit cards because of the high price. Um, I don't like this move from Amazon. I think it's too. They're trying to be too controlling here. If they're that worried about it, just pass the charge on to the customer. Clearly state that the charges are too high from Visa, and we're adding this extra charge onto you. And let them go and complain to Visa about it. But I don't like them going in and just stopping you from using the card, because I'm sure there's plenty of people that don't have Visa debit cards that want to still buy on Amazon with a credit
I've got
card.
a Visa credit card, and if they would prevent me from using a Visa credit card, I find it quite offending because they're
Yeah,
not giving me an option. And if they tell me, "Look, sir, we charge you 1% more," well, then at least I have a choice, right?
yeah. But I think this is worse on Amazon than it is on Visa in my perspective.
Yeah, exactly,
Yeah.
exactly, indeed. Um, Next question is from Kurt. He's asked, "Why do you guys think Uber is not moving up? Can you see a moat somewhere with this behemoth?" Kurt, I think you've asked us more earlier about Uber, but I'm just not following this stock. It's not a dividend stock. It's not of my interest. It's a taxi company. I see just laws being introduced everywhere, that the drivers are employees and such. So it's not interesting for me even to spend another 10 seconds thinking on it, Kurt. Not to offend you or something like that, but it's just not something that I'm interested in at all.
Yeah, I don't really see a moat with this company. It's easy to replicate what they do. And we'd probably see Tesla or someone when with their electric cars come in with and surpass these type of
Yeah.
guys. But they're not a dividend stock, so not on my
Mm.
radar either. Sorry.
Okay.
The Celtic investor has asked us, has Airtel Africa, ticker AAF, ever popped up on one of your screeners? And have you any thoughts of it? Plenty of growth potential and paying nice dividend.
I've never heard of it.
No, me
No.
neither. Me neither. Um, I don't know.
So maybe, yeah, let's look it up, and maybe next show we can get back on this one. As maybe not every listeners knows, we don't necessarily look at the questions before, so we take them on the show at face value. So
we
yeah,
should we should we should probably read over them, so we know what to look for.
yeah. No, but let's look, and maybe we get back next show. So,
Just a quick Google while you were talking. They look like a telecommunication and money mobile service in Africa. Which I mean, we know
could be interesting.
it could be interesting. Telecommunications, we know, are rocky. We've seen that from Europe
Yeah.
and the US. It could be more rocky in Africa, but they're headquartered in the UK as well. So it's
Yeah.
interesting.
Okay. Next question is from Thiago Diaz. He asked, if you knew of a company which you firmly believed was being traded at a very low valuation, would you ever purchase calls for them in order to leverage up? Yes, Thiago, I've done that because I did it with Shell last year when it was trading at 10 euros. I bought call options for an 11 euro strike price. A year down the road, they expired in September, and when it was trading at 18, so I made a really nice, I said, profit on this. The premium was one euro 20. So if you do the math, I earned 580 euro on this, and I bought two options, so more than 1,000 euro on this
Hmm.
trade,
That's
exactly for that reason.
Yeah. It's not something I've done. I know I buy and sell options, but it's usually cash secured puts or cover
Hmm.
calls. Um, I haven't really. I just feel that I don't trust myself to go to go that route. I get a bit too risky, and I'm a little bit more risk adverse. So I like to be covered when
Yeah,
in my option
but
trading.
for me, I do such a thing like once, twice in 2 years. So, for instance, if Alibaba would now drop to 100, like literally crash, on sentiment, while the nothing changes in the earnings. That would be a moment that I could take a long call option a year out on 120 or something like that, and then just take some of my dividends that I get as income and pay like $400 on that, put it on the shelf for a year, expecting that it will bounce back or something like
Yeah.
that. Yeah, it would be speculation, of course, but it is driven by low valuation thinking.
So the next question is from P2P Fire. What are your thoughts on the PE ratio of the S&P 500? I'm seeing different values depending on where I look. Do you look at this? I don't. I honestly don't. I think I've said this before. I don't pay attention to the broader market. I don't try and beat the broader market. I just try and beat myself, and I look at my own portfolio and how that's performing. So I don't tend to look at these sorts of metrics.
Yeah, me neither. Me neither. Okay,
Okay.
Repstones, he's asking AT&T at 24 euro, $24. What are we doing? Oh, I don't own it anymore. I don't need it in my portfolio either, so I'm not buying it.
I'm crying because it's dropped from like $32 or whatever I bought it at. No,
You
no,
still own them?
yeah, I'm still holding.
Oh shit! Hey,
I'm still holding. I'm still a hodler. Uh, at 24, look, I'm not doing anything. I think they're getting close to value zone. If they drop below 20, I would possibly think about adding some more. With the
yeah.
split, look, I think the fair value after the split is about 21, $22. So if they get there before the split, then when they get into value zone, I may start to add some more.
Okay.
What are your thoughts on Medtronic by Martin H?
So I own some Medtronic. I think it's an excellent run company. Really, I checked their operating margins this weekend, doing much better than the competitors like Philips and the medical device section of Johnson Johnson. For me, it's brilliantly managed. It's just a bit too expensive for me. And last time I analyzed it, there's an article on my blog. I believe I was a little bit concerned about the free cash flow growth compared to the dividend growth and whether it was sustainable to keep up this rate. So I might believe my thesis was that it should go down, the dividend growth in the upcoming years, but
Yeah,
they didn't last year, so they were still giving a nice hike. I love the company. The stock I would like to see cheaper.
it's a proud Irish company.
Yes, sarcasm.
It's if I remember, it's an American Irish company, so it's headquartered in Dublin
Yeah,
for the tax rates, I would imagine, but it's
exactly.
yeah, yeah.
Okay, and I think the other we still got some questions around degiro and ahold, but we discussed that. So Tommy, div collector, I believe you got the answers already from us here.
Okay, we've got one more question left on the show. It's from one of our Spanish friends, and they asked it to us in Spanish, so I'm going to give this a go. It is mejor acción dividendo pertenecía ahora mismo? Question mark. That means best British dividend stock right now.
In my opinion, American tobacco.
Oh, I thought you were going to go for Chisnera.
Oh yes, Chesnera, but no, not the best British because I think it's a small cap. There comes some, there comes more like single revenue stream risk into this. So I think with British American tobacco, if I would need to choose the two, right, I would go for the tobacco company. Personal preference for me is probably Chesnara indeed.
I was going to, I was full sure you were going to say Chisnera. I was going to go with um, British American tobacco myself, but I'll have to go with Diageo just because they sell Guinness and I like Guinness.
Good one, good one. Well, hey, Objectivo 2030, thank you for the question. This was also the last question. We forgot to mention Gianluca from Germany who contacted us via Facebook because he was also the person having a similar question about Visa. So thanks also for that one, Gianluca. And I think the answer is something that you were looking for that we gave earlier. So, EMF, thank you again for a great show. It was a quite a long one, I think, but there was so much news to discuss. I hope it was of value to the listeners. Lots of things going on at the moment that impacts dividend investors if you think about the typical portfolios that we have.
Yeah,
So
yeah.
it was worth talking about this, I think.
I think so. Who says dividend investing is boring? I mean, look at all the news we've had this week alone, and we've had more. We had to cut stuff out, so it's a
Yeah, but
bit,
I
been
didn't make any trade in my portfolio in the last 4 weeks or 3 weeks or so.
either have
So
I, either have I actually. So that has
yeah,
to
yeah, yeah.
change.
Interesting, right?
Yeah.
All this news and it doesn't change our trading behavior.
Hey, I said dividend investing is not boring, but we're still boring.
Yeah, exactly. Yeah, exactly.
So, hey, as we said, cool. Thanks to everyone for listening. Tune in to us on Facebook. European DJI is a little bit more active there than I am. We're on Twitter. You can get us on our own emails or our own blogs as well. And thanks a million for listening, especially if you stay on this long. We know it's quite long. It's quite a long show, but as we said, we hope it adds a little bit of value. And we will see you all next week, hopefully.